Welcome to the discussion of the milk market for the week ending October 24th. So we'll get started with the headline. So the government is still shut down and we're entering the fourth week and just kind of like last week, we're just not going to get any of these reports. However, we do still get the class component data. All right, so Trump administration is working on options to tame soaring beef prices. We talked about that last week. And look what's happened to the feeder cattle price. They've been limit down three times this week. And one of the things I added to my daily summary sheet that I do send out is this is the LRP value that is based on the close of the feeder cattle prices. So if you've got black calves to sell and you want to buy some LRP, these are the numbers that you can lock in as of the settlements on Friday. Now, the index, consumer price index, came in a little bit cooler than expected, but it's still 3% year over year. And the Dow ended up breaking 47,000 here on end of the week. Now, on the dairy side, class 3 futures actually came up 37 cents. Class 4 came down a penny. We are in expanded class 3 whey and cheese prices on Monday because whey was up in January, February, and March of 2026. Now, that being up in 2026 usually doesn't impact the market, but again, we just got to watch it. We are in expanded limits. Now, there is a report that USDA is not going to pay the Q3 DRP indemnities, and if that goes into Q4, that is going to get binding if they actually owe money to you. So last week, I just talked about everybody blindly following the people in front of them, just not knowing what's going on. Now this week, I've kind of gone back to this classic painting of a man in a small boat, on these rough waters, because all we need is just a little bit of a bump in the spot market, and all of a sudden, these class 3 futures take off. And if we look at what happened on Friday, we'll see the actual numbers here in a minute. But there were 7 trades, and we went from $1.73 up to $1.77. And so the question is, what happened on Friday? So there were 2 groups that were buying. One was one that historically has been buying just along here, and the other is what I would call a broker. And so one explanation is it's a general shortage of fresh cheese. Now that's a little bit hard to believe given the overall number of cows I think we have. Or maybe some of the small companies just needed some really late holiday purchases. It's getting awfully late to buy for Thanksgiving, but they may be looking at shoring up some cheese for Christmas. And I would have called it a general risk on day. Now, again, part of the agriculture sector was down, but the Dow was up, and it just felt like everything was moving up, and so that could have carried on into the spot market here. But we still have the same sort of scenario where the spot plus 40 is holding a premium to the futures contract, especially after we get the new class 3 prices in December. So this last week we had the global dairy trade, we had the National Dairy Sales Report with the advanced prices, and the UMW spot milk. Next week, I'm assuming we're going to get nothing but the National Dairy Sales Report. So we're definitely in a time when we've got no data to analyze. So here is the global dairy trade. It was down 1.4. It was down almost 2% for cheddar, down almost 1% for butter. The big one was whole milk powder. So this is how the numbers convert into the U.S. products. And so butter is $2.96. We're $1.60 on the spot market. We should be exporting, but we just don't have the right butter. Cheddar is $2.16. We're $1.78 on the spot market. That should give us some exports, but non-fat brown milk is $1.24. We're $1.16 because it bumped up on Friday. So that's probably too close to do any major exporting. So here's a look at the National Dairy Sales Report now. The trade did not like this, and it was kind of interesting because I'm still at 1697, and they've dropped down in the 1680s. And I was always 1419, they're down to 1415. Overall, butter came down about 9 cents. Blocks came up about a penny, and whey came down 3 cents. And when you look at everything in total, the model actually did really good at predicting this. It was about 17 cents high. And again, part of the problem is the whey. The whey is one that actually brought it down more than blocks or butter. So this is how it kind of looked here. The National Dairy Sales Report was $1.73. Spot was $1.74. There was a -1 in the premium, and that's exactly where we had looked at that. But right now, I'm about $1.73 for the rest of the month, and the trade's about $1.74. So we're very close on cheese overall. Now, whey prices were a little bit lower than we thought they would be, and part of the problem is we've got a 4-week lag in here, and it's always kind of hard to know when we're going to hop up to these higher prices. And so the fact we didn't hop up like we did, like we were expecting to, doesn't surprise me. But next week, I would guess that we should be up in that 64-cent raise. So overall, I'm about 61 cents for October, and the trade's at 59.4. And that's about 18 cents difference on the overall class 3. So that's where our big difference is. Butter came in with a 6-cent premium, so it held up fairly nicely. And we'll see how it, plays out for the rest of the month here. Now, I don't usually show a non-fat dry milk, and I realize the reason I don't is because we trade class 3, but class 4 is impacting most of the milk check. So probably should look at this. And that came in right where we expected it to. It was low, for these couple weeks back, but it followed the spot market now. So if we look at the futures market, which is Friday over Friday versus the spot market, which is week over week, class 3 came up on the spot market about 55 cents. A lot of that was cheese, a little bit of that was whey. And the class 3s came up 37 cents with a big increase in the close-up months. So last week we talked about $1.70, $1.80 kind of a range for block cheese, and we're right in the middle of that. Interesting, we were actually higher back here on Monday than we ended up on Friday. And so the trade just took a while to buy into all this. Trickled down through most of the week, and then Friday we popped up on 7 trades. So this is a long-term view. I've kind of kept changing this right side of this because I don't know if we're in a downtrend, an uptrend, a downtrend. But this is very choppy. That's the choppy waters I'm kind of talking about. So right now I would say we're in a slight uptrend, but I'm going to be interesting as to whether this is going to hold on Monday or not. So whey prices have just been coming up here. Again, there was one trade on Thursday, but nothing on Friday, nothing on Wednesday. But I'm going to go ahead and move this up to 65 to 69 because it has just been very strong here. So just realized I've got the wrong graph in here, but class 4 dropped about 18 cents. And that was all due to butter. Butter was down about 24 of that 18. And the futures Friday over Friday were down only about a penny. And there are right here on these new lows out here in more of the deferred month. Butter just can't seem to break out of this $1.60 range. We've been as high as $1.67 and as low as $1.54, but there were heavy trades on Thursday and Friday. If we look at the non-fat dry milk, it popped up on Friday. We'd been very much in a downtrend, and something got the attention of non-fat dry milk, but we're way off of the low that it could be given the global dairy trade. And again, here's that bump up on 28 trades. So a lot of non-fat dry milk traded on Friday. So now we kind of look at the components. Fat was down 4 cents. Whenever fat is down, protein tends to be up. So that was up 5 cents. We've got new lows in this fat contracts. Other solids were up quite a bit, and we're hitting new highs on that. Being up 6 cents is a huge deal for other solids. So here's the summary that I kind of put together. Blocks hold a premium to the futures market, and they're pushing $1.80. Now whey continues to increase, and it's pushing 70 cents. Butter is struggling to get over that $1.60 hurdle, and non-fat dry milk caught a bid, but it's still 8 cents below the global dairy trade. Turn to grains. Now, there's a lot of rumors in the end of the week that there's going to be a trade deal between China and the U.S., and that really drove the bean meal market up about $10. So it ended at 3.05 4 basically. And so we're definitely headed up here. Corn came up just a little bit, but bean meal is the one that's holding all the geopolitical cards at this point. And then finally on weather, if we go out to about the 4th, there's going to be a tremendous high ridge here over western and a low pressure over the northeast. And so that's given us the final numbers from Weather Prediction Center that it's going to be very hot in the west, very cool in the east, and not a lot of precipitation in the midsection. So we did end the growing season, out here in the corn area this last week with a frost, but that was not particularly early. So I don't think that created a huge amount of damage. All right, with the government closed, there's not a lot to talk about, but that's what I have for this week, and hope you have a great week. We'll get you another report next week.